All right. Our next guest says it is not worth paying up for these payment stocks, and he's got the receipts to prove it. Let's go off the charts with Todd Gordon of TradingAnalysis.com. Todd, what are you looking at?
Hey, Melissa. First one is PayPal. And the conversation you guys are having is very interesting, Guy. I like what you said. If you don't own it, you can buy it. Unfortunately, I own it. This is the third worst holding in my portfolio. PayPal, like you said, the $100 level is key. And if you could zoom in right here, you have a little bit of an inverse head and shoulders, which is just basically a low, a lower low, and then one more higher low, and then we move higher. We really need to hold that level, else I'm going to stop out. I certainly am not going to add. A lot of underperformance is the key takeaway here in PayPal. The other one that had the opportunity to really make a move significantly higher was Squarespace. I mean, just really, really vulnerable through this uptrend line. We obviously have a downtrend line, which would be a nice catalyst through the 65 region here. But if you continue to break through about 61 here in Square, I would say that's a no touch as well. So those are your two have-nots in the payment space. The one that I do like that really caught my attention was Fiserv, FISV. I mean, you can just clearly see it. This isn't rocket science here. Where do you draw the lines? Where's the strength? We're clearly making a new high here in FISV. So through 110, I'm actually going to be looking to add this one to my portfolio. So I do like this one in the payment space. With regard to the conversation about larger cap banks having a higher multiple if they move into the new age of payments, Bank of America, I think you could do a little bit of a catch up here. Clearly a very nice uptrend here. We've just made a new high through 33. I looked at doing JP on this one, but JP is so far gone in this environment that I said maybe bank is a little bit of a better play. And of course, with the move up in interest rates, we've seen 50 bips on the upside since October, certainly helping the financials, re-steepening of the yield curve. So Bank of America, a little bit of a catch-up play there.
All right, Todd, great to see you. Thank you, Todd Gordon of TradingAnalysis.com. Lori, you had said before that you didn't like the payment space. Is it valuations that you don't like?
It's that, and also we're going through this dramatic shift in the market in terms of what investors want. So we know that yield, dividends are becoming more in vogue. You certainly get a whole heck of a lot of that with the banks at a cheaper multiple than what you'll get with utilities and REITs, which people are pushing back on these days. The other thing we've seen, though, is that, a lot of the charts we just went through, great long-term secular growth stories, there seems to be less appetite for that in the market right now. I think investors, have played out a lot of these trends. They've worked for a very long time. I think some investors are looking for, I hate to use the word, but slightly more boring stories at this point that offer some safety.
Well, it's funny, a boring story is Fiserv, and it's boring to the tune of being up 50% on the year and expected earnings and revenue growth of like 22% next year, trading at what, Guy? 22 times.
22 times. I just looked at it.
Yeah, so back in the old days, you would say that would be growth at a reasonable price, even though it's above a market multiple. But this is kind of the nuts and bolts, the backbone of payments. They've been acquisitive. They've done some smart things, and it seems like they're getting paid back this year for it. But this is the sort of stock I think you do want to buy on pullbacks.
And they quickly just reported, I think, on November 8th. And if you look, a lot of analysts had to ratchet up their price target. I think the high one I saw is about $126. I don't think it is expensive. It's boring. So am I, but doesn't mean it can't continue to go higher.
Never boring, Guy. Never. I mean, just sometimes.
Mostly.
During the show, mostly. But
unfortunately.
Karen, for Square, I mean, it had all sorts of businesses, but I mean, it sort of whittled down. Got rid of caviar.
Got rid of caviar. I think the timing on getting rid of caviar was excellent.
Yeah.
I think that was really a good move for them. I mean, there was a lot to like. One of the knocks on the story had been that the rate of growth of the GPV was slowing down. In fact, it had plateaued. It did not continue to slow down. That was a big positive. I kind of like the story for Square. Back to the banks, though, if I had to pick one, I think Citibank probably has the most upside.
Over JP Morgan?
Yes, even though I love JP Morgan, Citi hasn't gotten to its all-time high, not all-time high. It may never get to its all-time. It's 7, whatever. It's 1/10 of where it used to be. But it hasn't gotten to its last year high, and I think it could get there. It has more exposure outside of the United States. That's been weighing on it. But I think Citi is the most upside.
All right.